All right. Good morning, everybody, and welcome to another Engineering the Markets. All right, double checking that the audio is good. We are all set. So, welcome. Happy March to everybody. It's the end of February, so we are starting a new month. My name is Jared, as always, and it is March 1st, 2022. So, as we are concluding a month, I figured it's worthwhile to look at where we are from a monthly perspective in the market. And I've just got the ES futures up just to remove any drawings that we normally look at on the week. So overall, this past 2 months has been quite tumultuous for the market. And a lot of technicians and market sort of evaluators are looking to see, is this a start of something much larger, or is this a typical market correction, one that maybe has been needed for quite a while, and have we really done anything significant on higher time frames to indicate that the market is likely to fall further? Well, certainly, there are some larger macro drivers at the moment. Whether or not the Russian-Ukraine conflict causes larger supply chain issues moving forward, if this becomes sort of a year-long issue, and the changes in regards to certain sanctions do affect global economies, that would certainly put a bit of headwind in some of the U.S. Macroeconomic pictures, and basically the companies will have some challenges moving forward as they either adjust to or modify their profit models away from certain countries. However, when looking at a pure technical overview of what we've certainly been through, and looking more forward as to what the more likely scenario could be, the monthly does paint a slightly different picture as to how far we've come and how significant this drawdown has been. First off, it's worth mentioning that on the monthly, we had become very much extended away from any key moving averages that a normal trending market would often like to check back in. You'll find that there are moments in time where this occurs. Markets can sort of drift higher and higher, not necessarily requiring the pullback, but simply following a different sort of moving average. For example, we often will add an exponential moving average and just sort of model this on whatever one has worked in previous uptrends. For example, I like to use the 12. You can also use the more aggressive 9, which is more of a intraday or momentum style moving average. And as you can see, there are historical points in time where the market simply is trending, but that trend is not close to these longer term moving averages, along with these relatively simple ones. They're not weighted to current prices. And as the market moves higher, the relative performance does tend to skew these moving averages, as they are based in percentages, they're based in price as opposed to percentage. So when looking at our monthly, we are seeing a period where there was an outperformance and then an eventual correction back down to these moving averages before continuing a larger uptrend, basically a larger bullish run. There are certainly periods of high volatility as the market is correcting, but these corrections can take us both through the 20 and obviously retesting the 50. And then, of course, black swan style events where we do have faster drawdowns, and these are, of course, breaking any technical models. Usually these are going to be outside of expectations, and the bounds that break do tend to obviously disrupt the technical model. But bigger picture here, as we have seen one of the largest bull sort of yearly performances last year, it's worth understanding that this was constructed from a technical sense off of certain pullbacks. And whenever we model the uptrending channel that the market had been in for quite a while, basically the trend line support that we've recently breached, it is noteworthy to see that during this correction, we did have to break trend. We had to break our trend line, and we did have to print monthly lower lows. The key here, though, is on the monthly time frame, have we seen a lot of confirmation as to whether or not these monthly lows are testing recent swing lows, or are they breaking them? And over the past 2 months, at least from our candle close perspective, the market has been able to essentially hold above in this upper trading range. And what this does is it gives us a sense of what to expect moving forward, albeit there are larger forces, especially when you're considering monthly time frames. For example, in previous corrections, especially ones where you've either tested or broken relative monthly swing lows, the market can stay in this area for quite a while. Essentially, looking at the all-time high and anticipating any bounce trades to get to those levels might be more of an investor or sort of core positioning mindset. But for the average swing trader and most traders who hold positions for slightly less time, this target simply doesn't make a lot of sense. For one, it doesn't have to even get there. It can never really see that all-time high until 20, 30 years later, who knows? But additionally, the market can stay within this trading range for much longer, sort of rebuilding the structure. And during this time, the market simply is underperforming. It's not giving us the same type of relative performance. And from a technical sense, it's consolidating all of this relative gain that has been seen over time. This is where typically, if the market is to break down much further, we'll want to see some sort of distributive monthly pattern that would form. And obviously breaking some of our most recent swing lows, these are high volume swing lows on the shorter time frames, the daily and the weekly. This would of course be confirmation that this monthly trading range was much more distributive in nature, and the market has a chance to enter bear market territory and potentially fall much further. But the here and now, what's being advertised to us, the market generated information for the month, is that we've had 2 volatile trading months. That is without a doubt true. The trading range here is roughly equivalent to what was seen during some of the more recent corrections, and this is from a percentage basis. So from high to low, you want to be thinking about the size of monthly candles. And these high to low sort of drawdowns, some of them in the likes of 15%, at least based on the percentage performance, they match what we have currently seen most recently. Anytime you draw from the high, you have to scoot your thing down or you won't see your tool. So 13, 15% drawdowns in a month. I mean, these are notable ranges, but they're not out of the ordinary. They're not unprecedented drawdowns. These have been seen before, regardless of the catalyst, regardless of what has caused the market to correct. Typically, the market corrections look like this. They model similarly. And of course, as most bullish investors would say, if you are looking at entering certain stock positions, corrections simply define your risk a little bit better. They allow you to buy in at the lows or near the lows, obviously with sort of a averaging in or tranche mentality. And that mentality has allowed most investors over the past 10 years to not only average into their positions, but see the type of bullish run that we've seen while protecting themselves when the market gets extended. And conceptually, this makes sense as a technician as well. If you're a bull and you see a run like this, you're obviously not as enthused to be buying up here, with the understanding that the correction can come at any time. And usually near the highs is where some of the highest ranges form. It's where the last thrust of the market tends to be. And that's typically the last, in this case, the last bulls entering the market. The retail, the ones that typically have poor timing, along with lower liquidity near the highs, because while larger market participants want to potentially sell off some of their holdings, they want to keep the price relatively stable. If they are essentially out of the market, the larger supply imbalance at the highs, this is sort of your general market auction theory, that liquidity and that imbalance near the highs is what can disrupt the price and eventually lead to searching for lower prices to restabilize the entire market. And this is how markets work in general. You kind of think about a classic example to the stock market is things like real estate. If you have a ton of inventory and the market is accepting these prices, then you can go out at any point in time, find a house, and you're expecting to pay somewhere within a relative range of what is expected for housing prices. But as the market maybe begins to get more bullish, people are raising prices and inventory is going down, well then at some point that destabilization of what to price lower inventory and the imbalance of supply demand near the highs, people still want to be purchasing, but the supply model has broken down or has changed. And that disruption allows for markets to correct. Now, obviously, I'm not out here saying the correction's over. We're not going to see lower lows, all steam ahead. That's not the point here. The point here is to give perspective. It's always important to back things out after a period of uncertainty and fear and lack of clarity in the market. If you've been struggling to sort of get a sense of where this market has performed and what has been the leader overall, or leader and laggard overall, when you look at the S&Ps, this really doesn't look too bad. The correction overall is relatively in line with normal corrections. And while we're going to see how far this correction goes, we certainly want to be looking at this marketplace as an opportunity moving forward and trying to define strategies that still work, even if the market isn't always making new all-time highs each and every month. We're not in this market anymore. We're not in a market where it's simply buy calls, hold for 30 days, close your eyes, and wake up to 200% gains. That's a different market. We're out of it. We're done. Looking for other strategies, looking for other positional opportunity, and really just noticing where the money is going. If the money is leaving the S&Ps, it's got to be going somewhere else. And if you're a long bias trader, there are going to be long bias positions to find. You just want to avoid the ones that are in corrective territory and be cautious of what can occur during these high volume corrections. We've certainly got a great example to look at over the past 2 months. If this is your first correction, welcome to the party. Take the past 2 months and look at it very closely. Model it, understand it, feel comfortable with it, because this is how markets work. It is not like this all the time. So for the S&Ps, this is where we are. Not every market that we track looks the same. Obviously, the Nasdaq has been a bit more disruptive, and a lot of I would say uncertainty around this market moving forward with some of the upcoming Federal Reserve actions. How fast are they going to raise rates? Are we going to see such an acceleration that it forces sort of the economy into different, maybe potential recessionary drops? We're certainly seeing the potential for things like stagflation with this Russian-Ukrainian conflict. How does that force the Fed's hand? And the most sensitive of products to rising and falling interest rates tend to be tech and growth and financials and commodities, or just energy-based or energy, just to kind of clarify. So when looking at the Nasdaq, the model here is slightly different. Last month, we did have a monthly close below our most recent swing high. So the Nasdaq, so far, if a monthly perspective is being placed in this market, is advertising to us that it may have confirmed this monthly lower low in regards to a close below the swing low. And while the trading range concept still takes place, this market might be one that underperforms moving forward. Maybe this market continues to print lower lows as the S&Ps might find their relative trading range. You know, this is a more focused index. It does have a lot of exposure to high growth and high tech. And looking at these candidates on monthly timeframes, we want to keep an eye on how these stocks perform moving forward. If you showed me Apple's chart and you showed me the trend line support that is already taking place, I'd say, yeah, there's a potential for this trend to break. We just tested it, but we haven't lost anything yet. And Apple is our strongest market cap name in the S&Ps, in the Nasdaq. It's the most important stock in the stock market from a market cap perspective. So the monthly on Apple looks just fine. However, we just tested it. So during that correction, of course, there was a lot of people scared and fearful because Apple came to test support, which means it came from a high and tested its lows. And that is what people see. They see the overextension. They think this goes on forever. The market corrects. They either get out, they fear sell, they don't buy in more in case of certain investments that potentially are still undervalued. And then they wonder why the stock market moves ahead without them. You know, this technical overview is not broken in any sense, and it's been in place for quite a while. So as traders, we want to take advantage of this. This is high probability trading right in front of us. Excuse me. A little bit of sinus congestion today. Stocks like Microsoft. Yes, they've broken relative trend lines. Microsoft was not necessarily the easiest stock to model. We are coming back down into lower bound support areas, sort of rising trend lines, but this trend has evolved over time. It's modeled off of different moving averages, and it has accelerated over time, making it harder and harder to see on corrections where the bottom can be placed. How far down does Microsoft have to correct during corrections? Well, if we look at examples like the COVID drop, Microsoft can come down to the 20 period on the monthly. I know that doesn't sound like a lot, but people were certainly fearful during this time, and this was simply a 2-month drawdown to a rising monthly moving average. Yes, this is looking parabolic, but remember, this is percentage performance. You also want to consider things like the log scale on some of these charts. And that's where something that looks absolutely out of proportion, something that's so far removed from the mean, if You just bring it down into a log scale, it really changes your perspective here. We are in sort of a linear channel from a log performance perspective. And whether or not this holds, obviously the time will tell, but same ideas here. Has Microsoft really broken any relative monthly support, or have we simply tested it? Have we really seen closure below swing lows, or have we simply come down to offer new support buyers an opportunity to find an entry? So a lot of these questions are obviously underway. We're posing the questions here to keep them fresh in your mind, to understand that the market is giving us information each and every day, every week, and every month. And no matter where we look, there are going to be stocks that are overextended from a normal perspective. Google, obviously very strong performance last year, starting to consolidate or put in those monthly distribution style ranges. But overall, log performance here, fairly stable uptrend. Lows get bought. Pullbacks to the moving average tend to be buying opportunities. The market continues on forward. You have to wonder if this is just another drop in the bucket. Is it just another red couple of candles that we'll look at in a couple of years and say, wow, should have been a buyer as opposed to a seller back then? Should have been thinking long term as opposed to being fearful in those few months, being too close to the market and allowing the market to dictate your emotion as opposed to your game plan, whatever that plan happens to be. So just wanted to point these key stocks out. I wanted to point out performance, monthly performance. Ending the month is obviously a key event for the S&Ps. There are activities that go on, mostly in the option market. You're going to see things like rolling of contracts. You're going to see a lot of people sort of covering out of positional risk. And usually this is because the monthly expirations do fall close to higher volume expirations, whether they be weekly or, for example, next month as we get into March, you'll see a lot of series sort of stack up near the March expiration. You'll have weeklies. In March's case, you'll have quarterlies. And then, of course, the carryover into April. April will be sort of the Friday expiration. So sometimes this can dictate a lot of just option rolling or covering activity, and that can dictate the chart. Now, without looking too much more at the high level here, and I'll go ahead and just kind of remove studies here because we are looking a lot at just relative price these days. Understand that yesterday, the S&Ps did have a little bit of a bullish challenge. We did see some of that momentum start to pause out. But remember, the S&Ps right now are challenging retracement lines. They're challenging the resistance levels that have provided larger sell-offs so far. You can even see that most recently in the pre-market, one of our deeper sell swings is occurring right at this trend line. This is something that we already marked, we already had on our charts. So nothing new here. The market's kind of doing what's expected when you hit target. The question now is, we are above sort of the more aggressive downtrend, the one that formed recently. We've given the bulls room as a market to form higher lows. And if they do reject here, what we want to see is them defend some of these relative supports that have been built. One of the most clear ones that I can find on the S&Ps for clarity is simply this low. The lows here can be seen on what is essentially an inverse head and shoulder. It was tested on the right shoulder. This was the pattern to look out for in the market. It has formed. And what we're looking at is either a horizontal breakout or potentially a slanted neckline. We are trying to break a slanted resistance, so it might be worthwhile to see what we do at slanted the slanted neckline for this head and shoulder. If we can break all of these at one point, this is a pretty powerful signal that we're no longer looking at downtrend retracement. Strategies start to change in this environment. We might be looking a bit more bullish. We'll be looking for things like maybe putting on some debit spread opportunities to the top side with clear targets sitting above. We might also be looking to see, can we continue to sell premium? Because if this does confirm, and it is an inverse head and shoulder by all pattern recognition, all pattern recognition ideas here, selling premium against this level is not a bad strategy. Volatility is still high. If that volatility starts to roll off even further and the market is directional in some period of time, selling premium is a great way to extract some profit from the market and still keep your risk defined in the event that there is some secondary catalyst that leads the market to another gap down, breaks the technical model once again, and obviously we'll assess that if it forms. So all in all, looking at this current day, the market is challenging resistance. We've seen it in pre-market. We've kind of seen it yesterday, but bulls are coming in here. They're finding support at levels that make sense. They're finding those areas of interest and they're pushing prices higher. Regardless of what we've seen over the past couple months, regardless of what's to come, if the bulls prove it here, we should see that confirmation. The bears continue to press down. It's their time to shine. They're at downtrend retracement resistance. Today's the day. Understand that whoever wins, obviously you want to be on the right side of the trade. You want to be thinking about strategies that work in both scenarios. Every thesis should have the right signals, confirmation. And then if you have a game plan for each of those environments, you're basically prepared for whatever the market throws at you. So all in all, let the market dictate your trade. Market generated information is our theme for the week. We'll look more at this tomorrow. We'll get away from the higher time frame and talk about some of these strategies a bit more. And ultimately, we'll see what other news is coming out. Couple of earnings plays today. We'll look at that in pre-market prep. The likes of Target actually looking pretty attractive in this pre-market, so that'll be one to keep an eye on, along with things like Zoom and Lucid reporting after hours. So all in all, trade safe. Stay tuned for pre-market prep, and we'll talk more tomorrow.
All right. Good morning, everyone. Welcome to Open Market Prep. I hope everyone is having an amazing morning. Hope that you guys had an incredible day yesterday. Good morning, Norm. How are you doing today?
Hey, good morning, buddy. I'm doing well. How are you?
Doing good, man. Doing good. Can't complain, right? Um, guys, let's give a big thumbs up over to Jared for engineering the markets every morning, guys. He does an amazing job putting that stuff together at 8 a.m. So let's give a big thumbs up over on YouTube. We appreciate it very, very much. Norm, I'm gonna skip right to the spy. See, it's popping up now. Is there anything going on that's making this rally at the moment, or
I have not seen whatever news just started popping it up. So
yeah?
yeah, I'm sure we'll hear it in just a second. But no, I don't know what's popped this the last couple of minutes. Today,
Okay.
9:45, we got market manufacturing PMI. 9:45, 10 a.m. ISM manufacturing construction spend. So not a whole lot of economic data out today. Still relying on the macros, the war in Ukraine, and everything else. So we'll see.
All right, we'll see where that goes, guys. Let's take a look here at our watch list from yesterday. We had a couple of things that actually did pretty decent. Let's start with Foot Locker here. We'll look at our 5 minute from yesterday. We had a nice little rally on these guys. Where it is 5 minute right over here. So again, just overall pop. Yes, after selling off the last 2 days or so, you had this beautiful continuation on Foot Locker. So we knew that was a good possible. We had the usual suspects, guys. Apple, which again didn't do that great compared to some other stuff we had on deck. Here's Nvidia. You can see how you got a couple opportunities here, and in this market, you got to take what you can get. You know, you're not always going to have days where everything runs like this, right? This is obviously Foot Locker has a catalyst. They had earnings, which they did pretty bad, and I'm not sure if there was an overreaction on the drop that they got a few days ago. But you know, they ran up yesterday. Apple, for the most part, you know, you did get a couple of plays that you could have taken advantage of. Not great pullbacks here below the VWAP. That's usually tough to trade. Going the same direction again. Nvidia here. Nvidia, why am I 5 minutes not loading? Oh, there it goes. Nvidia, same situation, guys. You did get a nice drop on Nvidia though later in the day, right? So you did get a nice little drop here. Got very, very toppy. It did trade slightly cleaner than Apple on this play here. This 5 minute pop and drop right to the VWAP. That was really nice. This is very clean action there compared to like an Apple. You can see how much deeper this pullback is. That's tough to trade. I know it looks clean now, but when you're in the moment and you see a drop below the VWAP like that, I think it's going to be weak. It's tougher to anticipate that the next move. SQ, guys, just incredible. Again, um, I don't have a bias against SQ, but the few times I traded this, which have not been many, have not been great. I just been so bad at it. So I tend to, even though I put it on my main list, kind of stay away from it a bit. That was a mistake yesterday. So as you can see here, look how great this thing traded. Beautiful pullback to the moving averages, and then the takeoff, just holding on to the 9 here and not looking back into later parts of the day. So again, SQ block there, doing really, really good. We had Neo on deck again, a little. The open seems to be like this more often than not on some of these stocks now, right? A lot of indecision happening, whether we're going up or down. Then things tend to settle down. So this is why you hear me, Norm, and other moderators, you know, sometimes you just got to wait, you know, 15, 10 minutes, let things settle. There will be an opportunity for you to trade. And you saw that here on Neo. It actually broke out real nice from the high of the day there, and a nice continuation. So we'll stop here. Let's take a look at our gappers list of what we have this morning so far. Quite a bit in the green, not as bad as we've seen it the last couple of days, right? With the market making really big moves. And as I'm saying that, I see Neo, I still have it on my screen popping here. Just popped up about 25 cents there. And gapping down list, a couple of names that, you know, they don't trade very well, like this Indo and some other ones on here that are on the red this morning. So let's take a look at our top 5 on the gap up, top 5 on gap down, and then we'll take it to Norm and then the room and see what we can find to build our watch list today. Let's take a look here, starting with TGT. This is Target.
Target. Yeah.
I'm assuming earnings because these guys, we barely hear from them.
They had the earnings this morning.
Yep. So there's earnings, guys. I mean, that's the only time we really get any type of action on Target. Let me get our daily here, see what that daily looks like. Nice pop. We're up 12.8 this morning. So real nice pop on Target today. We'll definitely add them on the list. I'm not a huge fan of it because I can't trade it very well. But today, you know, we'll see where that goes. So TGT, we'll add that to the list. Definitely in play. Here's Mara. And I got to tell you, so Jared mentioned Mara yesterday. and it normally doesn't trade very well. I've been keeping it off my list, and yesterday you had the only breakout on this thing, so really turned out pretty nice. And this morning we're seeing some good action on it as well. So maybe Mara's going to give us a couple of good days here. This is good pre-market activity from them. We haven't seen that in a while. At least I haven't. But today looking pretty good. Daily also looking nice. I got a couple of days here in the green that popped up pretty good. We'll see if this can continue with its rally that's been on the last couple of days. So Mara's definitely going on the list today.
Got a lot of crypto stocks on here. Hut, Riot, Coin.
Yep. What's the overall news? I mean, I saw a headline, but I didn't get to dig into it and read it too much on what the details were. But I know there's some stuff that's positive for them. This is the reason why you're seeing Riot Coin, all these on here. I just can't remember what the actual information was. But Maris, out of all of them, is probably my favorite one to trade. Riot is a second one too that trades very well. The other ones, Coin, for example. I'm just the risk management on this. The spread could be nasty. So just be careful on which one you choose to pick for your list there. A couple of in between here. We have Baidu this morning and Bucket. Bucket is on here as well. Let's not skip that one. Bucket right now, high short flow interest at almost 35% there. But again, just a horrible trading stocks. We'll skip on that one. EQNR, which is this one. This looks foreign. This looks foreign. So yeah, that's no good. Then we'll look at Baidu. Baidu this morning popping up 8.5, 147,000 shares traded. I know many like Baidu. It can trade decent. I don't think I have traded Baidu in quite some time. We'll add it on here and see what's happening in that area. All right, we'll stop here. What's gapping up? Let's see what's gapping down today, guys. We got GDRX. This is down 31%, 675,000 shares traded. So big drop for them this morning. Quickly, I'm looking at the volume at the bottom here, and you can see there's not a whole lot of volume. So I don't like that when you can move, what's this, 22, 25, 26. We're barely just, what's this, not even a million shares traded if I'm looking at lining this up correctly down here. That's no fun. That is no fun there. So I have no high hopes for this one. I know the pre-market actions throwing some volume around, but I hope to find something better, maybe like a Lucid. See what Lucid's up to. So Lucid this morning, 1.6 million shares traded, down 12%. Definitely like this one today, guys. And this had earnings last night, by the way. This had earnings last night, and we were
Did you do math this morning?
No, why?
It's the fastest I've ever heard you talk.
Am I going pretty fast?
I don't even think you've taken a breath in the last 3 minutes.
Oh man, let me slow down. That happens sometimes. You just get going, but no math today, unfortunately. I think I'll be just so zoned out.
Okay. Sure.
But Lucid, guys, yeah, you know what? I'm so used to not having time. But I forgot we do have a lot of time.
We got plenty of time.
We got plenty of time because we're done so
early. We can
early.
Bob Ross this pre-market show.
Yeah, Bob Ross, that's my man. All right, guys. Let's hit the slow button on this for a second. So here is Lucid. We had earnings last night, and on this one, I was in the room with in Ed's room last night. He was looking at a couple of stocks in play. I think Zoom or is it, Zoom. I forget the other two he was looking at. And there's some pretty good opportunities there. So guys, if you're into earnings, Ed does earnings when there's big names or notable earnings. He'll be in his room after hours trying to catch a move there. So definitely tune in to Ed's room for those events. Lucid, guys, looking good here. I like the volume, 1.6. Again, big gap down yesterday after earnings. We'll see where this goes today. Let's take a look here at Indo, which again has been making noise up and down here, but I'm not really a fan of this one at all and the way it moves. So I'm just gonna keep it off my list. Man, this list looks pretty bad on the gap down. SE, we know the stock is horrible. LBRT, nope, no good. This is bad as well. MP, and the reason, if you're wondering why we're saying that, because we'll get the question, 5 minutes later, why do you dismiss this one or that one? I mean, just look at the daily and pay attention to the volume. This stock doesn't trade heavy volume at all. Look how nasty these candles are forming. And then look at the pre-market action, right? So there's nothing here that looks good. And I'm sure if you happen to one of these intraday trades and you look at how it did here, the intraday action, although you had a nice day, probably wasn't great. And also, you can't see this in a dead chart. When I mean by dead chart, I mean it's already recorded. But in a dead chart, you can't see the price action, but you have a market replay. So you can go into your market replay, take one of these tickers into our market replay, and play out that day and see how nasty that price action is, right? That's a good way to tell, how a stock trades. So again, this looks good here, this day here, but if you log in there, it's not going to look pretty as far as being able to trade the way we normally trade. Let's see. I'm going to skip down to what's DB? Is DB any good? No, DB is no good neither. STLA is no good. I just want to get down to Zoom. Zoom had earnings yesterday, guys. So I think this might be in play today. Right now, down 2.4, 148,000 shares traded. They normally don't trade great pre-market activity, so we're not seeing that right now. But I think this will be a good one. Yeah.
During the market, yeah, for sure.
Yeah. They're down 2.4. We'll see how the market is going to treat them today after having earnings after hours last night. All right, excellent. That is what we have. Norm, anything you like on your end?
I have got my my everyday list going because once again, I'm finding yesterday was the same story. The gappers, I didn't really see a whole lot I liked, but I had my list of what I'm about to throw out that all. They traded great once the market opened. Facebook, Apple, Nvidia, and Square.
Yeah, Square was real nice, man. Square was really, really good yesterday. I'm mad I didn't even look at it, right? So I'm not even look at it and give it an opportunity. But yeah, Square was real nice yesterday, and their day looks good today too. So I definitely like that one. What is no? I didn't look at Facebook yesterday. What
Facebook Daily's got my attention.
Yeah. This is looking very nice, guys. I mean, we're down, obviously huge drop here, and we're squaring up pretty nice here on Facebook. Again, might not happen today, but I have a bias that this is going to
Square.
I'm sorry.
Block, not Square.
Yeah, sorry. Yes, guys. Yeah, I mean, for years, calling it Square.
Stock formerly known as Square.
Yeah. So SQ here, guys. So now Facebook's daily looks decent, and Nvidia is good, and Apple obviously definitely a must watch. So we got a couple in here, guys. I think this is a decent list for today. Let's take it to the room. What do you guys have? What's in this coffee, man? I try to slow down, but this coffee is like has me on fire. I see now that you mentioned it, I'm noticing it.
Did you get it from a guy on the corner?
I don't know what the hell my wife put in this. I'm gonna have to talk to her after this. All right, let's take it to the room. Triple H, we did look at SE was one of the top ones here on our gap down list. I mean, I know you look at the pre-market activity; it does look interesting.
$30 on $100 and some odd dollar stock in like minutes. No thanks.
Yeah, it's brutal, man, and be very careful. Again, today you're seeing higher than usual volume, obviously, but I am not a fan of the way this thing trades in the intraday. Spread can get nasty. It's not great. No, actually, it's pretty bad because those zeros, you can't count those zeros, right? You can't count that. That's going to drop you to the next tier down, which was roughly a little bit more extended. It's just so thinly traded too. I mean, that's going to get better at the market open, of course, but just be mindful of that. Can Norm and I be absolutely 100% wrong? Yes, it can be the best thing today, but I'm not taking my chances on this one. I'm going to look at something else that's going to give us a better opportunity. That's good. All right, let's take a look here. SE. We do have jobs. Jobs, or like, is this an actual ticker? It is. Well, what is it? Is it like ETF or like what is this?
What are we doing?
Jobs.
I don't see. Did somebody recommend that?
Yeah. Somebody threw that out here. I never seen this ticker before.
I'm having issues with the chat, I believe, but
oh, you are. Make sure it scrolls down. Sometimes you get stuck and you got to scroll down. But yeah, jobs here gapping up 12%, guys, 80,000. But look at this pre-market.
I believe that's a Chinese staffing firm.
Is that? Oh man, that is no bueno.
Merger.
Guys, yeah. All right, not even a great catalyst on top of that. But either way, this pre-market here is just nasty. So we'll skip on that one for now. DKNG. Let's see here, DKNG. we got going on DKNG? Pretty much flat right now. I don't think it's really anything happening at the moment. Their dailies had a couple of nice green days the last couple of days here. Although you've been gapping down and just kind of rallying, right? So there's a gap down here, another gap down there. So two gap downs that turned out green, including this one here. You're getting to an area where it just might kind of just not do much, right? Especially this previous day close line. So I'm not liking that one as much today. Heading down SE, we looked at well, nice SoFi. Let's see here, SoFi. SoFi has a good pre-market activity this morning, 1.1 million. We're up 2.7. Yeah, this looks nice. Been rallying the last couple of days. This could be a good one for us today. We'll put SoFi on the list. Fabius, you're giving us a few. I'm gonna take Oxy because two of you guys are throwing that one out. So let's see what Oxy looks like today. The up 2.5, 292,000. Big day yesterday. I'm sure what happened yesterday. Big day yesterday. Look at this here. Nice big pop yesterday on Oxy. This morning, are we going to get a continuation? Who knows? That's a big run. You are getting higher than usual volume than you do get in the pre-market for Oxy, as you can see here. So yeah, let's keep an eye on Oxy. We got quite a bit here. Don't worry, we're going to fine tune this. There's some stuff here that we can easily kick off our list with no problem. All right, we'll stop here. Let's take a look over at our YouTube chat. What do you guys have this morning? Let's start with Jay Oxy. We have, thank you, man. Daniel giving us CCL. Let's see here, CCL. I don't know. I don't think it's really got anything going on right now. Yesterday, nice little drop there and a nice double bottom, by the way, here. Not the cleanest, but definitely a nice double bottom there off that level, and then a nice pop into the VWAP and the continuation. So that actually was pretty decent. Today, I'm not sure. I mean, we'll have to wait for the market open on this one. We'll add it here. If we can find nothing else, we'll keep it, but we'll add it there for now. JCRWD. CRWD. What's going on here? Security company, is that what it is? Cybersecurity. Yeah, they're definitely popping up with everything going on. This is a tough one to trade. I traded this in the past, man. Their price action, it could be brutal. So just be careful. I don't like the way they trade in the intraday after the bell. So that's the only reason why I'm taking it off. But I agree, cybersecurity companies with everything going on are rising here and popping up. This is up 2.6, man. It's just tough to trade. I had battles with that thing. So I'm gonna stay away from that one. DDD. Is this another security company as well? What is this?
Oh, it's 3D.
Oh, 3D. Yep. Okay. So we're up earnings last night. Yeah, earnings last night up 17.3. Here's another one, guys. Nice big pop today, but for the most part, looking at this daily, look at the average volume and the pre-market now. I mean, this is something that doesn't hit the criteria for me to add to the list. So I'm just gonna keep this one off for now. Actually, we do have. Thank you very much. I see Norm, you're busy with that nonsense. Thanks, man. Let's skip on down here. MULN. No, we've seen this before too. It's more of a penny stock, man. I'd stay away from these, right? Look at this, 35 million shares traded, up 8.9. Had a whatever seems to be a decent day yesterday, but this is just not the style of stocks that I want to trade, right? So that's the only reason, guys. So I see two of you guys throwing it out there. It depends on your style. I mean, we don't really focus on things under $5 as much, or at all. Especially this one. This thing hit a 60 cents, right? It's just a whole different animal. The price action is going to be different. The liquidity is going to be different. Everything is different from what we are used to trading. So this just doesn't hit the criteria. Doesn't mean that it might not be a good one. This is definitely in play today. There's no question. It is in play for those that trade this type of stock, right? But that one won't make my list. Jack Flash, yeah,
plenty stocks.
It's a low. I didn't even check the flow. I just looked at, yeah, but it probably is a low flow. Yeah, 22 million. Yeah, so it's just not what we're into on those. All right, next we heading on down here. HUT, Core Red Productions. Yeah, I think HUT, Riot, Mara are all looking decent today.
Sure.
HUT is probably my least favorite. For me, you can watch any one of these today. I think they're going to be great. I think Mara and Riot tend to be the ones that seems to have the better price action and liquidity. I like Mara out of all of them. I think they move. They tend to move the best for me. Target we have on deck tempo, so that's good to go. Roy giving us CARG. Oh, no. CARG is no good,
We
guys.
got it.
No. This
We
is
finally got it.
this is not. It caught me off guard because usually when a stock is crap, you look at it okay, but this one caught me off guard. Yeah, this is no good. No pre-market action, no volume. And if you're new, Roy, this is like new to the channel. Thank you for joining us this morning. But this is just doesn't meet the stuff we're looking for, right? And the more you watch, you'll see that this is not going to make our list on any type of stock that we see this on. Last one, plug, and then we'll take it over to community events and announcements. Plug this morning, pretty much
SoFi's ripping.
It is. Let's go here to what's going on. Oh man, what's the news on this thing? By the way, they look good today. Before this, they look even better now. But yeah, what's going on?
Earnings after the close. I don't know what they have going on this morning.
All right, so that's looking pretty nice, man. Nice little pop there. Careful, guys. Stick to your plan. Don't start chasing things. If just make sure you have a plan in place. Stick to your trade book. This is where you shouldn't be trading anything that's not in your trade book. It's very, very important. No matter how attractive this looks right now, just stick to your trade book. So if you have something in your trade book to chase this, not chase it, but get into this, it's in play. But just stick to your trade book. But yeah, through levels looking really good, guys. We'll definitely have SoFi on our top list. All right. Let's get to our community events and announcements. We're gonna come back and fine tune this list. It will get better. I know this doesn't look the best, but it definitely will get better.
All right. Ed's webinar on journaling should be posted soon if it's not already. Next Monday, 8 p.m. Eastern. You've got Kyle doing a Q&A on Dash Trader Pro for technology. Then tonight, you have Peter talking about lightning bolt pattern. That'll be 8 p.m. and one of his signature strategies. Next Tuesday, 8 p.m., you've got Mike talking about how to determine when to move your stop to break even. Then tomorrow night, 8 p.m. Eastern, you've got Dr. Kenneth Reed talking about avoiding the trading trance. And next week, Wednesday, 5 p.m. special time due to our time zone, Creda, which that was so interesting yesterday, despite all the technological problems, talking about how your childhood affects your trading. How to identify the negative thinking that causes losing trades. That'll be awesome. No, Gary, I'm just tired. I am not on meth. Thursday, it is mentoring day. We've got 11 a.m. with Andrew. 4 p.m. it really starts with during earnings season with Ed, but technically starts at 4:30. And then 8 p.m. is with Thor. All right. Don't forget about stocktradingsimulator.com, our free web-based trading simulator. You can go there and try out some trades any time of the day, 24 hours a day. It's free, as I mentioned. And if you'd like to, you can sign up for homework assignments, bottom right corner, and just put in your email address, and you'll get those assignments. If you're watching on YouTube and you haven't been in the room, you'd like to try it out, use the promo code PREMARKET24. All you have to do is go to the bearbulltraders.com homepage, scroll down about halfway, you'll see that test drive now button. Click it, fill it out. It'll bill you one time. It's not a recurring payment or anything. Gives you 7 calendar days, 5 trading days in the room to try it out. And if you'd like to gain access to all of the webinars we have, use that promo code LOVERS50, and it'll get you half off the Elite Annual membership.
All right, thank you, Norm, for that. All right, guys, let's get to it. Let's get to our list here. Right now, we have Target, we have Amara popping up here pretty nice as well. We have Lucid, Zoom off of earnings last night. Apple, NVIDIA, usual suspects. Apple also popping up here pretty nice as well. NVIDIA, not so much yet, but I suspect that will be active today as well. See the SPY right now pushing higher at the moment. So
yeah, trying to go green. Anton asks here, do I believe Domino's CEO retiring is tradable news? I will tell you, I frankly, Domino's is one of the worst tickers you can find to trade. So doesn't.
Yeah. What is that? What's the ticker for that, by the way?
DPZ. It's just, it trades thin. It's high priced. It moves around a lot. It's just not.
Yeah. Very, very thin, guys.
They had earnings this morning. I mean, look at that. That's just
It,
yikes.
it doesn't do anything. It's just
The spread is $9.
Yeah. Yes.
No,
It,
run, regardless of the CEO or anything else.
yeah.
Just stay away from it
This is no
for the
good,
purposes
guys.
of what we're doing here.
Yep. Yep. All right, let's take a look here. So we have TGT, Mara, Nvidia. We also looked at Facebook, SQ. I think we got a couple of decent ones to pick from. So let's fine tune this list, right? Target, Target looks good. Yeah, we'll keep Target for now. Mara, I like Mara today. I do like Lucid. Zoom, I think Zoom is going to be one of those hit or miss type things, but with the earnings last night, I think they'll be in play. What I'll do is, how we usually watch Apple, Nvidia, and Facebook. I'm just going to keep one of these. And Apple today looks very, very good. So I'm going to keep Apple instead of Nvidia, as I usually do. I like Nvidia a little bit better the last couple of weeks if I had to pick between these two. But I don't want to be too tech heavy when we got other stuff that might have some opportunity for us to look at. And the great thing is two things, right? We got our scanners. As you're looking at Apple, you can think about Nvidia, Microsoft, AMD, all these other tech companies that have been moving pretty much with the market, right? If the Qs are moving, all these tech companies that get volume have been moving, has been showing a good opportunities and volatility. Facebook, not really sure on this one. Definitely a possible, because I think we got to keep an eye on that daily and see when this pop is going to come, right? Be able to take an opportunity on that. We're not going to get first entry, obviously, but I would like to be in part of that run if that does happen. Who knows when it's going to be, but I think we are eventually going to get that. Here is SQ, great stuff yesterday. Not doing a whole lot right now in the pre-market, but I think I mentioned this yesterday as well. SQ is one of those tickers that doesn't give you an incredible pre-market activity, right? So we'll definitely keep that on there. So 1, 2, 3, 4, 5, 6. Not bad. Our secondary list, we have Facebook and Nvidia, as we mentioned. SoFi, we might need to move up. SoFi, we might need to move up with what's happening here. So getting some insane activity, pop, and action on SoFi. So we'll move them here for now. I think they look decent for today. And then the rest of the stuff, we have Baidu, which again popping up here. We'll have to wait for the market open, see how that's going to trade. Could be thin though, Baidu at times. I think today we'll see. Could be very thin. Oxy's looking very good. Had a great day yesterday. Definitely a top possible. And we have CCL. You know what? And I think Baidu and CCL, I might just drop these two off. They're compared to everything else that I have. These don't look as attractive to me right now. Another recap on this. Target is good, and Mara, Lucid, Zoom. Yeah, I think we're decent. We have one too many on our main list, but I think we're good. We'll do levels for all of that, and then we'll fine tune even further as we get closer at 9:30. We'll do another run to see how these are looking. Then we'll check what our moderators are looking at, see if they have any ideas we haven't covered, and we'll build a decent list today. Already not bad. It's a couple on here that look pretty good. So let's get to our levels, my friends. Let's do that. If you haven't done so already, take the opportunity to hit that thumbs up over on YouTube. Hitting at 175 likes. We'll love to be at 250 plus. Is our goal here. So if you can help us do that, that would be greatly appreciated, very, very much. And then we'll get some questions, right? I'll do some levels here, and then we'll get some of the questions I'm seeing here. I see Norman's writing, answering a few of those, but yeah, we'll get to some questions on this. All right, target. Let's do levels on here, guys. We do have our high of our pre-market, 232, 232.40. All the way up there. That's our high, and then towards the bottom here, our lowest all the way down here, just mixed in with the previous day close at around $200. So again, do not really need to mark that down. This thing had a big run already for their earnings play this morning. Let's look at the day to see where we can find some opportunities. 216.38 is a decent level. You can see here we have some support happening there. More support happening here, then resistance, and then that also becomes resistance one more time again here before we lose that there. So that 216 seems to have a little bit of action there. We head up towards the top. We have another area right around 228. So 228 might be actually a little bit lower. Might be around here on 227. You see a couple of days kind of doing the ping pong action here back and forth between your highs and that 228 as well. So we'll keep an eye on that one. I think it's a good level to have. And we have another one here, and it's okay to have several levels on this thing because again, the move, that's a $30 move, right? You're gonna have some levels in between there on the daily. So $30 move this morning, they're just crushing their numbers right now. 221, another good level where I see a lot of support and resistance, a lot of days opening and closing right at that price target. So I want to have that on there. And as you put that on there, you come back to the pre-market and you can see right off, we didn't look at this. We don't, not that we don't care. We didn't pay too much attention to this. We strictly went off the daily levels and look how nicely this is playing this morning. So you got this 221, right? Obviously, you guys know it is an area. You can clearly see, obviously, that 221 area is important for them. 228 getting a little bit of a struggle there as well. And then you have your pre-market highs, right? So this is kind of giving you a little more confirmation that these daily levels here are important for target, at least for this morning. As of now, 235, we do have a level here on the daily as well. And what we're looking at here is this area of support and resistance. And I love this when you hit a level, just kind of go the opposite direction. Just gives you that level a little bit more strength, and you're getting that there with TGT this morning with target. All right, you're good here as far as levels. Let's head down over to Mara. Mara this morning up 8.7. Good volume. I have not seen Mara trade this well in some time. It traded very well yesterday. Jared took advantage of that opportunity there. 28 is the high of the pre-market. Above that, we do have a pop up here, which is also being confirmed by a couple of days back in January, right out here, 3140, a good level of resistance. So you definitely want to have that on there. Now from 28 to 3140 on this stock, that's a big move. I think you might be taking, a stop somewhere here to rest, maybe right around here. 29.69, 29.62. It might actually be 30, might be the whole dollar, but I'll put it here, 29.62. You got a couple of days in here as well in this stretch, opening, using that as resistance, right? Opening, closing around that level. And then you have just one day here, right over here, this guy hitting that 29.62. So it seems to be somewhat important to Mara. Then towards the bottom, guys, you're set up beautifully here. Highs and lows from the last two trading days are doing an amazing job of getting these levels done for you towards the bottom side. So you're set there. Here's Lucid, 2 million shares traded. They had earnings last night after hours. Obviously, they're down 12.3, so didn't do too well, at least in whatever they reported. High of the pre-market here, 25.75. The low is just slightly above the lows from 2 days ago. So I'm not going to worry too much about marking that down. I'm just going to leave this level there. I'm not that interested in a couple of cents above that. I am actually more interested in this heading higher. If the SPY is going to move in that direction, see if EVs can bounce today, this one here. So we'll see where that goes. Towards the top, you got plenty of levels of resistance. As you can see here, you're all set there as well. Heading down to Zoom this morning, not doing a whole lot pre-market, but we won't judge it too much because we do need to give them a little time. Market open is when you're really going to get the feel for how this stock is trading. 131, 130.99 is the high of the pre-market, and 126.17 is the low of the pre-market there. So you got plenty of levels surrounding the price action from the last two trading days. I don't want to make this this area more congested than what it is as far as levels. I think you're pretty much set. We're looking for hopefully a breakout of 135 or a breakdown out of 125, and hopefully getting into a nice run here, right? The next level, if we were able to do that on this daily, can possibly be 141.39, and then towards the bottom, it can be 114, right? So we'll love to break out of this range here if we can, and hit one of these levels would be amazing, right? This one right here, you actually got 120 before you get to that 114. We'll see. Those are big moves. That will only happen if this thing is going to heavily trend in one direction or the other. Here is Apple. We'll remove some of our older levels. Here we go. That is the wrong key. There it is. So highs and lows right now are doing a pretty good job. You got the previous day close right now. Also good area of resistance for Apple at the moment. Again, that 165 has not been able to get above that in the last couple of days. Towards the bottom, just going to mark the low of the pre-market here at 163. And then the rest is taking care of you there. You got the recent levels from the daily last two trading days. Towards the top now, let's see. We do have one nice level here, 166 off the daily. And then all the way up here is a good one too, 169.93. So close eye on Apple. Pre-market action looks good this morning, better than it has in the last couple of days. So I really like what I'm seeing here. I like it better than NVIDIA this morning. NVIDIA is not doing a whole lot. Lighter volume than what we've seen the last couple of days in the pre-market. Usually NVIDIA by now we'll have, in most cases, the last couple of days, more volume than even Apple, if I'm remembering this correctly. But today, a little bit lighter. We'll see if that's going to do anything for us today. SQ this morning, this is, again, pre-market actually not going to get a whole lot. So you have to wait for the market open. High of the pre-market, 28.50. If we move to the left here, mark the low of the pre-market first, 123.52. And then towards the bottom, all set down here, your cover. Then up here, you got a couple of things. You have 135.37, very clean level, and then you have 141.60 right there off the day. So 2 levels you can put on your list there for SQ this morning. And then let's get to the last one on our main list, which is SoFi. And as I'm doing that, I see our moderators are getting their list together. We'll jump to that in a few minutes. And SoFi here this morning, guys. Again, we got this pop at 8:45. Nice little pop there with some decent volume. Went all the way to 12:32 from 11:70ish or so, right on here. So nice little pop there, 12:32. Above that, you do have a level here around 13.19. This is an area because you can see some days are just slightly off that 13.19, right? Either on the top side or on the bottom side. So, but that looks good there. Towards the bottom, all set highs and lows from the last 2 trading days. Yeah, SoFi looks good, guys. 2.1 million definitely has the volume this morning. They're up 5.2, and it looks like we might want to get on the shot of the high of the pre-market here. So SoFi looking pretty nice this morning. All right, let's take a look, guys, at what we have here. We have a couple of minutes, 9:07, so we can get to some questions. I saw some questions earlier here on the YouTube channel. See if I can get to those. Yeah, we could do that. We can change. You can actually come in here and change this to the spread if you'd like. I have the VWAP. There's a couple of features here, guys, if you didn't know. On your montage, just right click on this VWAP area, and there's a couple of things you can do here that you can put on there. I have it on the VWAP, but you have a couple other things that you can use instead. For example, the bid and ask spread. If you click on that, it'll tell you what the spread is, right? So it kind of gives you that. And I believe it does it that if there is not a, yeah, if there's a 0, this is pretty nice. If there's a 0 here, it will not include that 0. See, now
it doesn't count. It's only on level 1
right.
data.
So it'll not include the zeros on there. So, all right.
You do this for a little bit. You can almost instantaneously tell what the spread is. Though.
Yeah,
you don't need it to do it.
Yeah, you don't need to look at that. I mean,
I'd much rather see what actual VWAP is personally.
Exactly.
I'll pick up. So 224 is asking here: are you guys long or short biased? I try to be neither. I mean, frankly, I over the course of my trading career, overall, especially early, was long biased. I worked hard to get rid of that because it hurts you.
Yeah.
You have to be flexible. I mean, there are people with different strategies and everything else, but personally, I believe it hurts you to have a bias one way or the other.
Yeah, agree with that as well. Question if you have time: if you are watching Mara and Riot, and will you ever put GBTC or ETHE? Are those like the ETFs? What are those?
What's that?
GBTC.
GTBC is a Bitcoin trust I'll tell you. I think I can count on one hand the number of times I've actually traded Bitcoin tickers. It's just not how I roll, not what I do. So,
yeah, I wouldn't put GBTC. I've actually have traded Mara quite a bit. I mean, just look at the difference in this and in this, right? You're gonna get movement and liquidity in this thing over here. You're probably not good. You're gonna get movement. I just the way I trade, I wouldn't want to intraday trade this thing. Maybe if you're doing a swing trade, maybe this can be right. One you can jump on, but for the most part, Mara or Riot is what I'll be looking at. But Mara is my favorite one to look at when they're in play. Today they seem to have something going on, so we'll see. But I know what you mean, Norm. I mean, this thing went for a stretch where we didn't touch it because it was just horrible. Then we had a good span where it was actually pretty decent. But notice, I've been mentioning, I haven't seen that since like yesterday. We saw one good day yesterday. We haven't seen this thing trade nice in some time, at least for what we're looking for. It's sort of choppy at the open, but it trend nicely the rest of the day. Yes, this is why sometimes you have to wait, 10, 15 minutes is recommended you do that, especially if you're starting out. You don't want to get stopped out too early and then see your opportunity, present itself again, but you're already 10 trades for the day in the first 10 minutes, right? You don't want to do that. So many times we see this happen. I'll show you Apple. Let's look at Apple, right? Is Apple a good example? No, Apple's not a good one. What's it? Nvidia. I think it was Nvidia. Yeah, look at Nvidia, right? The first couple of minutes, a lot of this is clearly an indecision candle here. The first 5 minutes, right? Just no direction whatsoever. You end up pretty much flat. You drop down, you come back up. So you wait 15, 30 minutes. You can wait for things to settle down, and you usually get this chop at the open, and then you get some pretty good moves, right? So it all depends. And then there are occasions where this candle could be like this, and you miss the entire move for the day. So it's so many different things you can look at, but waiting sometimes, if you're getting stopped out a lot in the market open, waiting can be a good strategy. If you guys remember, Andrew did that for a long time, right? He wouldn't trade the first 5 minutes for a very long time, right? Then he developed more and more as a trader. Now he'll trade with, first 30 seconds if he has to, so yeah. But at first he will wait that 5 minutes. All right. What else we have?
And different markets trade differently at the open too. We've had some that are just clean right at the open. Right now, the last few weeks, we've had real choppy stuff at the open.
Yes. Yep. You're right. Pre-market sometimes has been a lot cleaner than the actual market open.
A lot of indecision.
Cases. Yeah. You're asking what is this S here? So there's a couple of things. This is basically, I don't know what they call this here, but this is your indicator of what restrictions or what's available as far as inventory to short. So for example, on NVIDIA right now, if I click on this, you can click on this, you're going to get this little thing here. It'll tell you how many units are available for short, and it'll give you if there's any restrictions and stuff like that. There's no restrictions on this, so I can short this with no problem. But if this wasn't short selling restriction, SSR would be listed there. If it was halted in the past, you might see an H, meaning that it was halted.
It would have, just a note though, it would have like SSR.S, because it would have, it would be on short sale restriction, but it would have shares available. If it just says SSR, there are no shares to short.
Exactly. So you might even see something where you have a T because it was resumed trading. You might have SSR because of short selling restriction, and then you have an S because you can short, right? That will all be listed there. But that's what that is. If you see an S blank like this one, like Lucid, this means we have no shares for short on Lucid, right? Which is a shame. I just noticed that.
I was just thinking the same thing.
That's a shame. IB, come on. No, but IB does very well with the short, so I can't complain. But yeah, no shares for short at all. Nothing happening on that one there. So Lucid definitely taking a nice little bath here, blood bath this morning. We'll see where this goes. But yeah, so that's what that is. All right, 9:13. Let's go to our moderators lineup. We'll do that, and then we'll call it a day, guys, or at least call it a morning. Let's go ahead and hear this save of the video, and we'll bring this over for our YouTube friends.
I'm going to answer one quick question here because it's been asked a couple of times. Al George asking, when you say Apple looks good, you need to explain 1-2 things you look at to make it look good. So first of all, specifically Apple and a few other tickers, what I called out this morning, for instance, are things that look good almost every day. I'm not seeing anything just fantastic that's really making me excited on the gappers list. That could change. We've had more pop up. I'll do a little bit more work in the next 15 minutes before the market opens. But Apple, for instance, I mean, what looks good in general is nice, smooth charts, consistent order flow and volume, full level 2, meaning there's orders on the book consistently throughout. So, and a nice spread. Those are some of the quick things.
And also, we've been watching this stock for so long, so we know from history how great it can trade.
You can trade Apple every day.
Yeah, exactly. All right, guys, moderators lineup this morning. I said we were doing this. Please hit that thumbs up over on YouTube. We appreciate it very much. It does help us out a ton here. We're sitting at 250. Nice. Thank you, guys. 250 is great. But if you haven't done so already, still hit it, and we'll appreciate it very, very much. Okay, let's take a look here. Starting with Mike, his watch list today: TGT, SQ, and Baidu. One SPAC opening up today there, no IPOs. Peter's list: AMD, Apple, Lucid, SoFi, TGT, and Zoom. Zoom earnings today. We'll see how that plays out the market open. Tiffany's looking at Target and Tesla, DEMA, Target, SoFi, Oxy, and Apple. Jared's looking at Target, Lucid, SoFi, and a secondary list, NVAX, DDD, and some BTC stocks this morning as we got some movement there happening. Eamon, potential longs just today, no shorts, plug, SPCE, and XON. XOM. Thor's looking at Lucid, Target, secondary list, Apple, XBET, and Zoom. And then Brian, which will be on live in shortly with Thor, Lucid, Target, Oxy, TNA, and Baidu on his list, guys. So looking forward to this market open. We have an okay list today, guys. We'll see where it goes. Be patient. This market has been good to us, but you got to be patient. Wait for your setup. Very, very important. With that said, over on YouTube, guys, take care, trade safe. We will see you guys tomorrow again at 8 a.m. with Jared, starting engineering the markets, and followed by Norman and I at 8:30 for the pre-market prep. Have a good one, everyone. Brian and Thor are up next in our chat. Take care, guys.
Take care, guys. Trade safe.